The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. And at least someone got the joke out there, so I'm happy. Anyway, it is going to be a very interesting day today, and mostly because we had a pretty much a huge move in the dollar. It went right down to where I've been talking about for months and months and months, which is that 96.30 level. We broke through it once. It was a false breakout. We went right to it within a penny today on the continuous contract, 96.31. Turned right back around it yet again today. I suspect I know the reason why, and that is that we had a lot of people selling dollars out here in the morning. And as the markets started to close in Europe, we had a ton of people starting and moving, buying dollars. And I don't know if we have a fight here where mommy and daddy are not getting along, but it certainly looks like the Europeans want to make sure that the dollar stays fairly strong. And it looks like we might have people on this side of the pond trying to do everything to whack it down. And it may be nothing more than a giant food fight. Food fight! Wow, that was loud. Maybe I need to turn that down. Hopefully it wasn't that too loud. Anyway, it was play that backwards. It's something to behold, actually. Of course, we had a lot of movement on gold on it. I don't see anything that changes my long-term view out there, which is agnostic at the moment. I would not be long, and I would not be short. But I would hope that this thing just goes and bores everybody out for the next 3 or 6 months and then allows us to get in and have one big, long ride. A lot of people could say this is a consolidation, and maybe it is, maybe it isn't. I just don't have any evidence. I would love to see this thing bore everybody to death for 3-6 months. My guess, though, is it will be and continue to be under pressure. And I've got some audio. I'm going to wait. I didn't get a chance to clip it up, but there was a gentleman out on CNBC last night, one of the few gentlemen I actually like, that I listen to anyway. And I'll chop that up and we'll play it on Monday. I just didn't have time. Too much stuff going on. But it was and is exactly that viewpoint I've been operating on for about a year, and for the most part, it has been correct, which is lower crude prices, and the dollar looks like that there is no end to shorting it. One of the ideas of this gentleman, though, and we'll get into him on Monday's Raul Paul, was that the DAX will continue to sell off because of China, as China's the biggest trading partner. Germany has an enormous amount of risk in going up against any kind of downturn in China's market, and it continues to look like China's market is going to have more and more problems. I suspect that we have our next gap down coming on Monday in China, and we shall see. But I think everything looks like we could have yet another 2 or 3% down day that starts the next ABC on the way down in that China market. I don't see anything that would actually stop it. I don't see any growth. I don't see anything else in copper or iron or anything else that gives us an indication that they're back to buying. But it does look very interesting, especially the way that these markets have set up. We've talked a great deal about this 2108 area on the S&P cash, where everything above it, the volume goes and turns to dust. I mean, not just a little bit. This is kind of, I know Tom talks about many people in the store. How about a store that has 50 people in it on most days? And then maybe on a weekday it's raining, you got 35 people. But what about a store that normally has 50 people and you got 5 in it? Well, I'm not over dramatizing the total lack of volume once we get through this 2108. And normally you just don't have that kind of on off in a market. I'm wondering if there isn't one of these big firms out here that has a computer and more money than the rest, that something changes at that point, maybe in software, because it's hard to see. Normally you're going to see in an analog system everything roll off, which means that you just don't hit one number and suddenly there's a brick wall there. Normally it kind of moves and slides and moves around, but this one is it is so vibrant and so identifiable. As many times as we've been up here, it continues to astound me. But I think that it looks like if you just looked at the signal and didn't say it was the stock market, you would say it was some kind of digital filter if it was audio. That if anybody's ever played with a mixer panel, you'll notice that they have high, medium, and low on adding and subtracting bass, mid, and high end on it. But when you turn that down, it's not like everything in that high range goes down. It's a nice gentle curve for the most part. And that's the way markets react generally. It's not an all or nothing. It's not a binary. It's not a 1 or a 0. But certainly we've had these markets look exactly like this. Now we are into fund buying, really at 2 billion shares as we start the show on the New York Consolidated Tape. I don't see anything in here that tells me that I should look at anything different. I put something later in my Tech Insider today, which is just a list of all the stocks. In fact, I'll show them here later. But it is quite outstanding as to, especially the last 3 or 4 days, how many stocks that we've had that have been significantly down and how many we've had significantly up. And of course, CNBC and the rest of the world will spend 5 hours on Facebook being up $1, and the 50 stocks that are down 5 to 10%, they spend 0 time on or act like they don't exist. And I think this is exactly what we've got right now. I showed this laundry list in the den a few times, put it in my newsletter. We'll show it here in a little bit, but it's quite outstanding, especially today, that they tried to push the market up on what looked to me like widespread selling in a wide variety of sectors, including, of course, when we looked at Exxon Mobil and some of the other people in that space. And of course, crude has done nothing for them. Trading out last I looked at about $47, but we will and try to persevere. Agnostic. TXP, well, that certainly didn't work out the way we were looking. Had a quick question in here in the den. Let's take a quick look at it, and then we'll get in and get this party started. Yeah, it certainly went the other way. Why we were talking yesterday about this thing closing down the other way. Certainly one of these stocks that is higher. And I will add that to my list. If it's not on it already, did I put it on it? Oh, no. Oh, I don't have it up. I've got to get it during the break. I will get it out in the break. Anyway, yeah, nice breakout on volume and everything. So no bottom out here, but nice test at the top. Other things that we have going on out here. We need to start the show. I haven't started it. We've dilly-dallied. We've gone on a tangent. I have digressed.
That it's all just a little bit of history repeating.
Today in 1914, with war raging in Europe, the New York Stock Exchange closes. It stays shut for another 4.5 months to allow the chaotic market to settle. I was just wondering what anybody would think about today is if this market or a market like ours just shut down. I mean, it did in 1914. It's been a long time since we've had that. Of course, 9/11, what did we close, 7 or 10 days or whatever it was. But for then, we normally keep the markets open if at all possible. The worst thing to do is just shut them down. But I'm looking at China, and I'm wondering what they're going to do come Monday, because I think they're going to be down. And the question is whether or not they just shut the entire thing down. There are a few other things going on that I think are going to put significant volatility and possible downside volatility in some markets on Monday, and we'll talk about those yet today. A question in the den, and that is, tell us our thoughts on LinkedIn. I've got the story on LinkedIn. We're going to be talking about that in the 4 o'clock hour with Tom O'Brien. But there is, and the way that this news rolled out is highly suspicious, but I have the inside skinny, as they like to say in the military, on what happened and how it happened. And we're going to talk to Tom O'Brien about it, because he brought up something on his show about me bringing up something yesterday, and we're going to try to tie it all together in one nice, neat bow. Anyway, that's it. Gold Corp slashed its dividends by 60% on Thursday. Firm said it expects to spend somewhere between $850 and $900 to produce an ounce of gold. This is a little less than its previous forecast of $875 to $950. But again, we're starting to see a lot of these miners have issues, and you should check to see and know, if you are looking at playing one of these, just how much losing a dividend would cause the stock to decline if you're going to get in these things and watch them closely. Again, it's been over a year now since I really didn't like gold, and it is continued to not do much of anything but go down a little, not a whole lot, but a bit. And again, I still think that the key to a great deal of gold's upside is going to be a great deal of these gold miners to the downside. And I just haven't seen enough of them start dropping like flies. I think is probably a good indication that that's when we want to get in gold miners long term. But we shall see. Kind of an interesting day in gold and the way it reacted to the movement in the dollar. But I don't know. To me, right now, I would have to be, it would be very hard for me to press a bet that had anything to do with dollar weakness out here. I am more and more looking at avenues to get into. In fact, we added another position back into the newsletter today that is assuming dollar positive and China weakness. And both of those things will continue to help move it along. We shall be back in a minute. You can always email me at path@tfnn.com. You can call me at 877-927-6648. You can post a message in the den. We'll be back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. Anyway, we're going to look at a few of these just real quickly, and we'll talk about them later in the show. But, you know, we've got a few stocks, and these stocks are getting most of the attention out here in at least TV land. But you got a great deal of these off rather significantly, and a handful of these up somewhat mildly. But they're spending about 10 times more on Expedia than they are on, you know, the five other stocks that are down today, like FireEye, just a bunch of them. A little bit of time on LinkedIn, but I have to say that the amount of time they're spending on LinkedIn is very low. What I'm saying is there's somewhat of a bias out here in the media. We're going to talk about Outer Wall here. We were shorted up to last week, made a few bucks on it. I didn't like the fact that it hadn't started to fail before it went into earnings, so we backed off of it. And you know, it would have been nice to have that ride it down. It's kind of nice also to know that I'm picking some pretty good stocks. But I always like, if I'm going to go into earnings on a stock, I want to see that there's already some weakness going in and a little bit of elbow room in case I'm wrong. And we didn't get it on that, but we will talk about that one for a while later in the show. But a lot of stocks out here that are out there. Of course, we talked at length about Sealy Tempur-Pedic yesterday. It bounced to the other side, and why it's very important to wait for that close below on earnings to pull the trigger. This thing was up $4.50. Nice little move out here. But of course, when we get back into it, the big news of the day are really these big integrated energy companies like XOM off 4.25%. Kind of hard to see that the market stayed up at all. And I don't know how it did it. Kind of almost like Jaws, where the guy says, we're going to need a bigger boat. Because I don't know how they kept it up as long as they did, but they certainly did. Anyway, we'll talk about these later in the show. We talked about Gold Corp. Just watch out what's going on. Some of the other things that came out at 2 o'clock, we found out that, or 1:30, I think it was, we came out with the rig count, so we know exactly how many rigs are up and trying to at least produce oil. They were up 5 this week to 664. And that's versus 909 in the United States a year ago. But what it tells us is even as crude has come down, it is cheaper to go back into production on some of these than let them sit idle. And the idea was that if we just turned some off for a little while, the price of crude would come back up. And now that didn't work. And the question is, what do you do now? And at least from my reading of the rig count information, if it is cheaper or less loss to produce than to sit idle, they're back to producing out there. So some of these are going to be producing at a loss, or some of these sites are, but it's at a lower loss than they would have if they didn't produce anything, which almost seems counterintuitive to produce at a loss at all. But at least that's the information that we're getting out of the oil sector today. Is a little counterintuitive out here, but it's just better off to make a smaller loss than a bigger one, even though the price continues to head lower. Of course, the atomic bomb that might be coming out on Sunday night, at least to the U.S. markets, might start to put a cold winter chill up the spines of some bond traders, is going to be Puerto Rico. It could go into default. It doesn't look like anything has been done up to this point. A big chunk of its $72 billion debt is due on Saturday, August 1st. And when we come back, that will be it. But it owes hundreds of millions of dollars worth of payments on bonds issued by a number of government agencies. The question is which ones will and will not get paid out. So who's at the front of those lines? And that's going to probably tell a great deal. Again, I've been on a kind of a theory that Bill Gross is one of the smartest guys in the world, and he acted insane only to get out of PIMCO, which is a giant bomb that could go off at any time. Very interesting to see, of course, the previous FOMC chair say that there couldn't be any problems with the liquidity. But again, in the last couple of days, who wants to be the guy that yelled fire in a crowded theater? I don't think anybody wants to, and especially his legacy, which is good. No reason to go in and start throwing Molotov cocktails at the bond market when you're in God's waiting room already. We'll be back in a minute. Give me a call, 877-927-6648.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien has just announced a live online workshop taking place Wednesday, August 12th, 6 trades for September. This special event will be open to all subscribers to his daily newsletter, Market Insights. Tom will walk you through 6 trade setups in the market he's identified setting up for September. 2 long positions, 2 short positions, and 2 option trades. New subscribers will also receive a free copy of his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, an $88 value. But we're not done yet. We're also including a Tiger's Den membership as part of all Market Insights subscriptions at no cost as well. You get Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, 30 days of his newsletter, Market Insights, access to his live online workshop, 6 trades for September, and access to the Tiger's Den. This offer is only valid for 2 weeks, so don't miss out. Sign up for your 30-day free trial to Market Insights at the front page of TFNN.com today.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's 0 risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Anyway, just a heads up, I'm not exactly sure how the market's going to react to the Puerto Rico issue because, of course, then how that's decided will probably spill over to Chicago, Illinois, and California over the coming months and years. And it's beyond me why Paul Volcker would say that there isn't a problem with liquidity, because for 30 years you've had everybody pile into one side of the bond market. It's beyond me, other than the fact that he didn't want to cause a stampede by saying something. And that is it. But in fact, I'll try to dig it up and we'll play that on Monday too, because it's very interesting to see how teed off he was. It was almost like the reporter came up and said, hey, do you molest your kids still? I probably would have seen less reaction to him if someone would have come up and said that than the reporterette who asked him about the liquidity in bonds and whether or not we're sitting on an atomic bomb. Captain, what was his name? Colonel Crunch on the bomb that went down in the end of Dr. Strangelove. What was his name there? Colonel Kong. Colonel Kong. I'll have to think about that, yeah. That would be it. Take a look at WLL. Okay, well, we'll take a quick look. HGC. Yeah, people, well, maybe it's for me, maybe it's not. WLL. Whiting Petroleum. Oh, okay. Pretty ugly down here. Again, this goes back to what we said several weeks ago when the market kind of cracked inexplicably to a lot of people. That is that a lot of these energy stocks broke the lows and just kept going, even though there wasn't a great deal of volume out there. Got a little bit of volume over the next few days, and you could think that maybe these things can rally back up to the previous low of December 16th on WLL, but that's at $4 in this thing. A lot of risk for what looks like a rout in crude coming. At least it looks like a rout to me coming. Anyway, that's it for news. It is a mad market, and we'll try to give it a little bit of lithium and see if we can't get it to level out a little bit. Anyway, as we go back and look at the markets, let me pop back to those real quick. 2105 and a half. So, you know, probably what you could expect on a Friday, which is, I need to get that Billy Hayworth and something else. What is that? Billy Hayworth and the Mad Dogs or something. The one-hit wonder with that song, Billy, Don't Be a Hero. Because I don't think everybody's getting ready to be a hero going into this weekend out here. In fact, it looks like this could get rather nasty and brutal as we go into the close here today. Because once again, we've gone up, and this time we're going to be about 1.7 billion shares short to go blow through the previous highs. So we only have 2.2 billion shares now. Of course, could we see at least a flat market Monday and Tuesday with a little bit of fun buying left over, or even a little bit of pop? I think we can. Be a little safer to pull the trigger maybe on Monday and Tuesday. But I've already started adding today and probably start adding on Monday if any of these things actually start making sense in the market. But I think we could see China down on Monday. I think we could see a big reaction to the Puerto Rican bonds. And one thing that no one's talking about at all right now is Greece. Those guys are trying to renege on the deal that they're making, but they're trying to keep that ultra quiet out here. But this thing is not off the lows by any stretch of the imagination out here. I would not be surprised to see this bounce through the bottom on Monday either, on more news of them trying to renege on the deal that they made. But they've been very good at keeping it fairly quiet. If I didn't probably read more European newspapers in the morning, at least the online versions, it would be interesting. But great deal of discussion in the European circles about whether these guys made a deal like the Iranians, which is, we'll tell them anything we want, and then let's see if they can back all over us once it happened. But it looks exactly like this is what's happening out here, and that is it. But it is interesting. No volume out here, but a lot of the little dojis out here. So either something's going to go very well or very wrong, probably in the next few days over in Greek. So keep a close eye on that. Okay, now we're going to look at some other stuff going on in the markets. I wanted to look at a few of these stocks since they're coming back. There are stocks that don't look incredibly horrible out here. Not a lot of them, but some of them. Urban Outfitters had a huge move up. It's coming back finally to where it started off its big run, which is the 11th of December of 2014. It popped up with 5.2 million shares out there. 2.5 million shares today. Probably going to get back into this gap a little bit more, but you know, at $31, it wouldn't look all that horrible. The energy on this last leg down, not big. So like I said, some of these stocks are not looking as horrible as you would think that they are. Some of these stocks are. We brought up Realogy, I don't know, a few days ago. Again, of one of these that's testing these highs. The only thing I can do is kick myself for not taking it. But again, I'm not big on going in on things. But this one's a nice triple top out here. 3.1 million shares on the first high, February 24th. $49.32, 3.1 million shares, 2.1 million shares as we got to February 4th. It spiked it, came back down, came back up one more time. And, of course, what do we have? 760,000 shares Again, on the 28th, it went a little sideways here for us into earnings and then blew apart, of course, on earnings last night. But that's kind of a microcosm of what's going on in these markets. What else do we have out here? Ermin, let's look at tile out here. Some of these out here are going after highs, and you had some decent volume, but again, they're not hanging on to these highs. It seems to me this is much more of what I'm seeing than something like TPX. And that is hitting these previous highs. This one had 1.5 million shares yesterday as it went through, and now is really having a tough problem holding on to it. No follow through yet today. This is TILE, the Interface Incorporated. Let's see what these guys do. So I kind of vaguely remember what they do. I said do. Okay. All the kids can laugh now. Sells modular carpet products primarily in the Americas, Europe, and Asia Pacific. Modular carpets. I guess those are little carpet squares with sticky on the back of it. Interface and floor brands, carpet tiles under the classic glass back. It's got fiberglass backing. Big in healthcare and facilities and airports. Interesting. Anyway, kind of an interesting stock out there. Of course, these 3D stocks, there is just nowhere to hide in these things. These things down again today. Yesterday had a lot of volume, but break of the previous lows yesterday in these 3D stocks. And yeah, 6.4 million shares compared to the July 21st low with 1.5 million. Even today, 2.6 million shares. So still a lot of volume in some of these. Let's take a quick look at DDD, see if it's doing anything different today. Kept on thinking these things should have, if they were going to hold, probably should have held around 27. When this thing actually cracked that 27 layer, that's really where you had to look at it. We played this for like a 10 cent or 20 cent option into expiration right time, and about 2 days later it went up to $32.88 and then came back down the other side. So it happened a couple of days after expiration, but boy, that blew apart after that, and it was it. But this gives no sign. None of these are giving any sign that they have found a bottom, which is rather interesting to me. What else do we have? Rollins Incorporated. Very interesting market out here, too, in Rollins. I think these are the security people, and if they are, back and look at them real quick. I think they are. Pest and termite controls and commercial customers. Company offers pest control services against termite. I guess maybe they sold that part off, or maybe they split. Food manager. This is just all killing bugs, which I kind of like. I think that would probably be a good, if I wasn't probably in what I'm doing now, killing bugs would probably be, it'd be cathartic all day long, probably at a minimum. What is not cathartic, of course, is this very light testing that July, I said it 3 times. June 30th, high, $29. That had 2.8 million shares yesterday, 747,000 shares today, 180,000 shares as it went slightly higher. So some of these things are starting to look a little weaker out here. Rheology Holdings, and we talked about that one. RIGL. Rigel Pharmaceuticals, a few of these out here started to bounce today, and it's not surprising. RIGL, this Rigel Pharmaceutics, gapped up on the 23rd of February with some heinous of volume, 15.6 million shares, came back down, and of course, yesterday, 445,000 shares back into that low. So you're probably going to have some very decent support in a handful of these biotech stocks. Did I look at the BIIB here? Not BIIB, BII. And we're still up 4 on that, but of course that's on earnings. The question is whether or not we get any follow-through on Monday out here. This still looks like a false breakout to the upside to me in the IBB. We've had this nice little pullback from a week ago on Friday. We've kind of gone sideways out here But on the news that we had today and in earnings for Amgen, which is up 3% today, I think we probably should have seen a lot more love come into this one. I think you can make a case that right in here, we've got the C point or close to the C point in the IBB for the next leg down. If we did, let's take a quick look at that. What would it look like? Here, if we made this the A, and we made this little guy the B, and this guy the C point. That would be 354. Let me zoom in on this just a little bit more. 354 on a 1-to-1. I don't think this index is capable of doing a 1-to-1. I think probably in this high 330s looks to me like a much more logical place that this would run to if it did break. And just super light volume out here today, at least so far on BB. So keep an eye on that. In tap. Again, not all these stocks out here, some of them look washed out, but none of them are giving me any sign out here that they are ready to run. I've been watching Intap for a few days, and it doesn't look bad. May 21st, this thing came down with huge volume. I think that was an earnings deal. 25 million shares to $30.85. It's been kind of playing around on that. It's finally gotten back in this trading range, but yesterday the volume was pitiful, 2.4 million shares. Today, 1.4 million shares on the pullback. But there are a handful of stocks out here that do look interesting. Let's look at XOM, since we were talking about that too. I have anybody? Yeah, Alexion, not so good for earnings out here. I have a bug zapper, and he loves it. Okay. Yeah, I knew that. I know people that love just sitting there watching bug zappers, as it is so cathartic. It's kind of like popping air bubble, those little air insulation bubbles for packing. It is addicting. Yeah, it looks like. Oh, I've seen those ones that look like the tennis rackets that you can hit the bugs with. Here, you'd run the batteries down because it's nothing but bugs in Florida. Anyway, looking at ExxonMobil, this thing bounced off its low, of course, on July 27th with 14 million shares that day. Of course, we got 18.5 million shares already. So we've gone to the lows. We've got higher volume. It's hard to make a case that doesn't say we want to be looking for a lot lower lows out here. And how many years do we have to go back to find it? We're basically just above the June 5th low of 2012 that had 22 million shares. So we're going to be close to that already. And my guess is that we are going back to these gaps. And those gaps, actually, there were a couple of reversal gaps that go back to November 29th of 2011 and 28th of 2011. Those two gaps, about 20 million shares out here. That would probably be the most logical place to think that XOM is coming. Anyway, you still have plenty of time to email me at path@tfnn.com, to call me at 877-927-6648, or post a message in the den.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. Anyway, somebody brought up USO. We are looking at that. It did tick below the previous low, 38 million shares right now compared to 54 million shares. And that would be very interesting out here. It does look very enticing. Now, the problem has been, and the problem will continue to be, if you look at my power law vector indicator number, basically this thing went up on a 14, went down on a 13. It isn't like volume really decreased on this downside. And so many stocks in that energy sector look just like this right before they blew out the lows once again. This is a Friday, a little lighter volume. I think you've got about 3 days, 2 or 3 days of real worrying out here on the USO that this thing does blow out that previous March 18th low. And I would not be surprised to see it. I'm thinking that we could see at least a day or two where you might see $2 or $3 move down in one day in crude. There's just so many people that went long crude a little while ago thinking that it had bottomed, and we're on the wrong side of that market, and I think they're going to pay dearly for it. And I don't think they're done. And I think there are a bunch of margin calls probably coming out of it. I mean, just the way it's acting, the price move in it makes me think that there are a lot of people sitting and trying to bottom fish crude out here. And maybe a lot of other people, well, maybe the big guys of Wall Street, figure that they can just pound them over the next few days. But I would be worried about that because it doesn't look to me like it's made any kind of low out here in the real near term. What else do we have out here? Coop. I haven't looked at this one for a while. Coupons.com. A lot of these IPOs out here actually are starting to base out a little bit on light volume. Coupons.com was one of those high flyers. When it first came out, it's done nothing really but go down for a long time. February 10th, it hit a low at $9.24. 13 million shares. Got into it with 1.2 million shares on May 6th, but it was in the candle, but didn't finish it. This is why we all say in price and volume, you really want it to see it pierce that low. It still hasn't done it, but it is getting fairly close. But on today, like 165,000 shares going up against a 13 million share low, you want to be keeping an eye on it. The energy was probably a little bit more than I would have liked on this leg down. But some people call these the fallen angels of IPOs, but certainly there are few and far between of those ones that you can actually buy. A Biomed, another one up here that is a triple top. Keep an eye on this. I mean, these patterns are starting to really develop, a great deal of them. ABMD, I'm going to be watching this like a hawk on Monday with my trigger finger ready. March 24th, 3.2 million shares at 74.70. We pierced it with 2.8 million shares on May 5th, right back in the trading range. Of course, yesterday, 918,000. Today, 649,000. I don't know when earnings on this. What is it? Earnings date. Let's take a quick look. August 4th. I guess it's coming up. So maybe it'll hang out up here for a while. But if this one would pop back in and start seeing some kind of selling, nice big gap down there between 40 and 45 that needs filling. In the meantime, hang on for Tom O'Brien. He'll be with you for the next hour. The hour after that, I will meet him in the TFNN studios for the Tech Insider Hour. We will talk all kinds of technology, LinkedIn, other stuff. Have a great weekend if this is it for you. We'll see you we'll see you Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.